Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, March 29th. Well, Wall Street's main indexes are rising so far today, with the S&P 500 set to post its best quarterly performance in 9.5 years on renewed trade optimism as the latest round of U.S.-China talks ended on a positive note. Today is the last trading day of the first quarter, and the benchmark index has risen 12.7% so far, its biggest quarterly gain since September of 2009. And on that note, let's go on and look at three charts that could give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark index. Also know, if we were to take the decimal point on the price you see here for the SPY, right now it's trading at $281.79. Were we to move this decimal point over to the right one number, you would get approximately the number for the S&P 500 index itself. So again, it's trading, when I captured this chart, at $281.79. or about 28.17 on the S&P 500 itself. Now we know that since the SPY rallied off of December 24th lows and then flew back up to its resistance at about 280 right here, and that of course came from these highs back here in October, November, December right here. So if we stretch that across, it would work. Again, it's been trading ever since it rallied back up to that 280. It's been trading in a fairly narrow range between about 272 and about 280 or 281. Now, it did, on March 21st, this green candle right here, it did pop to a close at $284.73. That is above that tough 280 resistance. But since then, it fell a little on bad news, as you remember, last Friday, and now it's back to its nap again. Some days I think I hear snoring. Again, when I captured this chart today, it was trading at $281.79, just above the red line, the 20-day simple moving average, the green line, the 50-day, and the black line, the 200-day. Now, good news here. The green line, the 50-day moving average, is coming in at 275.18. The black line, the 200, is at 275.32. It looks like we're going to get that nice cross here that's so good, the golden cross they call it, when the 50-day moving average rises above the 200-day moving average. Now, it's a positive for sure. I don't know that we can ever count on it as the most bullish signal on the planet, but it's nice. It's nice. It certainly means that that price over the last 50 days has been rising nicely and is now above, or going to be above, hopefully stay above, the 200-day moving average. So that's a good thing we're seeing. And again, the SPY, if you just looked at it here, you would say, hey, we're in a really good place right here, and hopefully we are. Now, the SPY, as you can see, hasn't been able, though, to rise above the $280 line, or 2,800 on the S&P, decidedly. As we head into first quarter earnings season, which we'll do probably in about 10 days, we're going to have to see if the S&P 500 stocks can attract enough buyers to sustain another upward leg here. Can it get over 280 and then keep going back up to the old highs here, which were, as you can see, back in September 2018. Now, if the SPY gets discouraged and heads lower here, if it falls to close below 275, I will raise more cash. I will become much more conservative in adding new long positions. So let's keep an eye here on the SPY in the coming week and see which way it decides to go. Our second chart today is a chart we've been looking at for the past couple of weeks. This is the iShares Russell 2000 ETF. As you know, we watch this in Tony's Market Club pretty closely because this is the small cap ETF. It's followed, the Russell 2000 is the small cap index that a lot of us use. Again, these are companies valued at 300 million to 2 billion in market cap. Small caps can act as a leading indicator for the broader market. Now, like most indexes, the IWM or the Russell 2000 fell to dramatic lows at December 24th, started back up on December 26th when the market reopened, walked up its 20-day moving average in a very nice move. But since the March high here, it made a lower low, and we can't count today's candle as a pivot point because, of course, it's not closed yet. And the next day, Monday, hasn't started, so we can't see if this is a high. But definitely it's made lower highs here in the last couple of months and 2 lower lows. So it's not dramatically horrible, but it's not the greatest thing ever. Now, the 50-day moving average acted like a ceiling all week as in this down move. The IWM tried to rally. Today it finally popped above the 50-day moving average, which is coming in at $152.41. And that would be, I'm saying dollars here because the IWM is a tradable asset ETF. Now, when I captured this chart today, the IWM was trading at 152.93. So this 152 zone is very important, and the IWM really does need to stay above this 50-day moving average and rally higher to be a bullish indicator for the market. Now, should the IWM, can it remain above the 50-day moving average? That'd be great. But if it does fall back down, I certainly want it back down through the 50-day moving average. I certainly want it to hold above this price low here. There's more support back here at 147, 148. That's pretty important. So, like the SPY, we're going to stay tuned in the next week. This is a mild negative here for the market that the IWM can't get going at a better pace. It's a mild negative. It's something to put at your elbow and just say, yeah, maybe I'll be a little more cautious than I plan to be. If the IWM starts higher, then I, for one, will exhale. Okay, our final chart here for the day is one we haven't looked at in a while. This is the Industrial Select Sector Fund, a SPDR fund, Select Sector SPDR Fund. The top components are Boeing, 3M, Union Pacific, Honeywell, United Technologies, Caterpillar, stocks like that, the big industrials. Now, after making a high back here in September 2018 of $80.41, the XLI started dipping, of course, fell in the pretty nasty downtrend that most other stocks and indexes experienced down to the lows here, down to a low of about $60.29 on December 24th, 26th, then rallied sharply back up very nicely, as a lot of indexes did, but certainly the industrials here did it with a lot more flair than most of the others. Walked up its 20-day moving average, came back up to a high of 77.13 in February, then rolled back down, as often happens when you get a really sweet move up like this. At some point, people take profits. It rolled back over, down from there to the 200-day moving average, made a couple of pops and falls onto the 200-day moving average. When I captured this chart today, the IWM had gapped up a little and was trading at $74.87. It is above its 20-day moving average, its 50-day moving average, and its 200-day moving average. So that's all positive. So it does need to break above this consolidation zone at $75.20. That's something to keep in mind. If the market is positive in the coming week and the XLI at least can remain above the 50-day moving average, which is now coming in at $73.67, I will consider adding shares to my portfolio, a small position for the moment. My initial stop is going to be a close below the 200-day moving average, again coming in at 73.15. Now, if the XLI climbs, the market's positive and the XLI climbs, I will move my stop gradually to a close below the 50-day moving average, now coming in at 73.67. If, and it's a big deal, if the trade deal with China really goes through, this may help the industrials, but I've learned not to count on anything in the stock market. We will have to see how that goes. Please remember, it is a good idea to keep firm protective stops on all positions, especially when the market is kind of standing on the curb as it is now, deciding which direction it wants to go. Okay, so now on for the coming week's economic reports. But first, please join us this coming Monday, April 1st, for our next session of Toni's Market Club. If you're not sure how you can make money in the market right now, let us help. During the session, we talk about which side of the market to trade, have a mini trading lesson, and I give you stocks and ETFs that may become ripe for high potential trades. If you can't attend the live session, no problem. The recording is available to all of our members just a few minutes after the session is over. This is a low-priced, high-value opportunity to learn more about the market, learn how to trade more successfully, and make more money. So please join us. For more information and to join, go to the link on this screen or click on the button below. And now on to this week's economic reports. On Monday, we'll have retail sales, the ISM Manufacturing Index, auto and truck sales. All that's important, to our economy. Not much going on Tuesday. Wednesday, we'll have our monthly ADP employment change, our monthly ISM non-manufacturing index, and our usual crude inventories. On Thursday, we will get jobless claims and nat gas inventories as usual. And on Friday, we'll get the monthly jobs numbers with the unemployment rate. Again, please join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.